just have a couple of questions. So you say you stand over the governance of the way all of these accounts have been reviewed. So how come we are now getting correspondence from customers who have contacted yourselves, who you didn't contact to say they were in the review? In fact, they've had to contact you in recent months to say that they should be within the permutations of it, and you're saying that they weren't. So how can we, I suppose my question is, how do we know that all affected customers have been contacted and have been included in the review?
So if we go through how the work was delivered, internally we had our own processes, but that's included in internal we had independent oversight, our own independent oversight, if that makes sense.
Who's the independent oversight? You said you said at one point there was external oversight. Who's the external oversight?
In our case, it's KPMG. And then the Central Bank of Ireland, at this moment in time, is also conducting its own, as you know, independent oversight. So, obviously, like all the banks, we have to be obviously a bit circumspect what we say this afternoon, because the central bank still hasn't conducted its independent oversight. My point is that in 2.5 years we looked at over 300 and something thousand mortgages.
Yes, just to assure you, Senator Conway-Walsh, we invested very heavily to conduct a very systematic and rigorous review in this area. We looked at 342,000 accounts over a 12-year period from 2004 through 2015. We identified approximately 110,000 customers who may be in the outer boundary of that.
I have that in your questions, in your written submissions.
And just to be clear with you, just for a second, so 76,500 of those customers never switched away from the product on which they originated. They continued all the way through, and they're still on that today. So the focus then was on the balance of 33,500. Of customers that may have switched away at some stage during their mortgage, or there may have been a margin deviation at some stage during their mortgage.
Yeah, and I really understand that, and my time is very limited, and I just want to seek assurances for people who have had PTSB mortgages that they have been included in the review, or do they need to start going back to their contracts and doing a review themselves? Is the responsibility on them to do that, or is it on yourselves to do it?
So we have conducted, I just want to build up the reassurance for you on this, so we have conducted that for 31,500 customers of the 33,500. Everything followed exactly as it should have. So effectively the review that we conducted, there was a core team, there was an independent decision forum team, there was an independent steering group. All of that was overseen by KPMG, and all submissions were made through the CBI and the board right the way through the process. So,
and there are customers that still slip through the net, obviously.
No customers
even given all of that?
No customers have slipped through the net in that regard. 1,979 customers have been identified as impacted across all of the 3 programmes of work over a 12-year period. 1,979 is what we've identified.
So customers that are contacting us now, or have contacted us in recent months to say that they've had to contact the bank to ask to be included, and in the first instance they're told they're not included, and then they go back again, what do you say to them?
Well, the reality is that of all the impacted customers, the 1,979, all of them customers have been written to. Now, we haven't gone and written to the balance, which is approximately 108,000 customers, to say formally that they're not in the review. We've written to the customers that were impacted.
But you're absolutely certain that within those 108,000 there aren't people who should be within the scope of the review? You're certain?
Yes.
Okay. Because it's quite puzzling for us then to be getting letters from people who say, even in recent months, you know, I mean, I can tell you here, right? This woman, she contacted the bank in October asking about the tracker review. Eventually the bank acknowledged that she was in scope. Had she not contacted you, she would never have been looked at all. So how can you be sure that you've completed this process, because there are people who've only been included because they went to you? And I just want an answer for that woman.
So that is correct, because when you think about it, the last time we were with the committee, we identified that there were a balance of customers that we would be writing to between that date and the end of the year. and those customers were written to throughout the month of December.
So we're not going to get any more letters like this, because I have several letters like that here that I could read out to you, but I don't want to take up my time on it, where people have been refused. You know, I identified myself to them. PTSB were never in touch with me. I'm really concerned about this, as there are likely to be other people who are not identified within it. And that really does concern me at this stage, because it's almost like you're presenting a picture of there's nothing to see here, the shop is closed and that's it.
So we are trying to give you assurance in terms of how we built it from the bottom up,
yes,
with independent oversight from KPMG. We are now subject to independent oversight from the central bank. So, you know, I can only give you the assurance, as I have tried to do, that we did the work in a very systematic way, starting with 300,000 or so and working our way down.
Could there be another systematic failure or error in terms of these people not, you know, going through all of those channels and yet not being contacted, like this woman here?
To the best of our knowledge, no.
Okay, I need to move on with a couple of other questions. Something that puzzles me, I suppose, is why the two appeals panels. So you've got the independent review panel, and then you've got the CAP, the customer appeals panel. And don't explain to me what they are, because I know that in your written questions, but why do you need two?
Back in 2015, we felt that the complexity and the time that would be required for loss of ownership and legal cases was such that we would ring-fence that as an independent panel. We felt, and it's always a value judgment, we felt that we had a very high bar in terms of duty of care for those who had lost their homes and who had been who were in late legal, and that was why we did it.
You actually say in your written submission, by the way, it's not late legal in any legal, at any legal stage, legal proceedings at any stage. So it's not, I would take that would be from the first letter, so there's just a bit of a contradiction there. But I still can't get the rationale for it. And the other thing I can't get the rationale for is the Customer Appeals Panel. You have a PTSB representative on that. There's three members on it. Why do you have a PTSB representative? You know, why is it not completely independent in the way that it is with other banks?
I think I've already answered that question, so I'll stick to my original answer.
Sorry, what was your original answer in why you have the PTSB representative on the Customer Appeals Panel?
My answer was that the number of different mortgage types, which we've just explained, the 300,000 mortgage accounts, the complexity, to me meant that it was important that committee had someone who could translate the complexity. Equally, it was also important that the panel remained independent insofar as it's a majority voting.
But is it not important that the whole procedure remains independent in terms of an appeal?
Well, the case I would make is that it is independent. And sorry, my colleague just reminded me. Again, this is back in 2015 for PTSB when we did this. That it was part of the CBI framework, I think, to have two panels. Isn't that correct? Yeah. Now I remember. Yeah, it was part of the CBI framework to have two panels.
Okay, and why aren't they independent? I see. I still can't get to the bottom of it. Is why they aren't independent? So why you have a PTSB representative on the CAP? Just why? Why do you feel it necessary to have a PTSB representative on it, and can it be truly independent if a third of the makeup of it is representing the bank?
Well, it's a majority decision with the chairman having the casting vote, and the chairman has made it very clear that having that PTSB representative is very helpful for the panel members in unpicking the complexities of the individual cases. So that's the position.
Yeah, you see, I wouldn't take that, because I mean I'm looking at their the resume for the different representatives, and they in themselves have a huge experience in the banking sector. And I can't understand why you feel the need to have it there when other banks don't have it there. Because to me, it just wouldn't be truly independent.
I've given you the
yeah, I do think that is completely unsatisfactory from an independent appeals board altogether. I just can't, and I don't think we've got to the bottom of it here today. Can you see why people may be reluctant then to go to an appeals panel where 1/3 of it is made up of representatives as a bank?
Maybe we should add as well, maybe 2 points. So the first point is that person can't, by definition, dominate the decision-making of that committee because they only have one vote of 3. And I think the second point is, in the event that somebody was dissatisfied either to go to the customer appeals panel or dissatisfied with the decision that came out of it, they still have the option of going to the Financial Services Ombudsman.
I understand that.
And mediation there. So the CAP shouldn't be seen as the end of the road, but it is a mechanism that we put in place.
Yeah. No, I just think that you should be providing an independent panel without people having to go to the Ombudsman. I want to come back just to the 242 accounts which were identified in the Springboard mortgages, which was a subsidiary of your bank. And I just want to go back to the time that those that were identified prior to the CBI examination, that loan book was sold off to Mars Capital. How were they affected then in terms of what their entitlements were? Or the processes for them, those 242 accounts?
So
the ones that I'm talking about.
So we have a very defined process for sold loans. So, Stephen, perhaps.
So the central bank has made it very clear that the responsibility remains with the originator of the loans. So although we sold the company Springboard and the portfolio to Mars Capital, we retain that responsibility. So PTSB has redressed and compensated the customers who were identified as part of that previous review.
So they've been treated in exactly the same way as they.
Correct. Yeah.
Not that fills me with confidence, but okay, that's right. I just want to go back to the original documentation in the contract. You say in many cases the relevant document set out a specific margin above the ECB rate, and then you had the other people who were where the rate was not specified. Were those being offered at the same time in parallel, or was there a date by which customers were offered the specific margin and then a date by which that wasn't offered to them in terms of it being specific?
They were offered at different times.
At different times, okay. Can you just tell me the times that the specific margin, maybe the years where the specific margin was offered?
Yeah, just give me a second.
Just when did it change?
I think we'll come back to you with the specific dates. My understanding was that there were actually a variety of different contracts, and there wasn't a hard cut-off between what we call the price promise and the appropriate rate. And even within those types of contract, there were different variations. To my knowledge, there wasn't a kind of a hard date before and after which we were offering the different types of contracts. But I think I'd suggest that we might come back with that detail, because I think it's a more complex question than your answer or your question assumes.
Why I'm particularly interested, I suppose, it's around the accountability of it. Did your bank decide at some stage that the specific, and what analysis took place at the time when the specific margin was finished? Because in that decision-making process there may tell us something around why this money continued to be taken from people, or people weren't put back on the right rates and all of that.
So as I said in my opening remarks, and as you've mentioned, there were two contracts, specific margin and appropriate rate. The specific margin, every customer who had a specific margin in that contract has been reverted to that margin. In terms of appropriate rate, through the exact dates, and we'll get those through, you'll recall that the financial world was in turmoil, and that the costs of the bank's funding changed over those periods of time, and therefore the margins changed.
Yeah, I'm just trying to decipher when the contracts were changed as well. Did you have external oversight at that time, when you were looking at the contracts and what the contracts meant? Did you have external oversight, legal advice?
Way back then.
Just to look at, when you looked at customers' contracts and you were deciding what your obligations were to those customers.
I think that goes to the earlier point about systems and controls. So maybe the level of governance that Jeremy and Ger have described in relation to the tracker review over the last 2 years, frankly, that level of governance on controls and systems wasn't in place in the mid to late 2000s, which is part of the genesis of this issue.
Well, there it is, all in bank language.